Investors are leveraging up while the VIX sleeps and credit spreads stay tight. It feels calm now, but we all know that can change in an instant. Stay tuned to discover why margin calls always arrive at the worst time. Don't let complacency cost you. Knowledge is your best defense.
Move forward, a lot of times in order to have a futures ability or to be able to partake in that, you have to have margin debt. You have to have a margin account. And in previous lives, a margin account was only for what was deemed a sophisticated investor, somebody that they believed could manage that debt. Or I should say that leverage that was going to be rolled out, whether it be in options, futures, shorting stocks, which is when you make money when the stock goes down because you have to get a borrow. There's a lot of complexity, but now we've seen more and more people get approved for margin debt. Robinhood is one of the ones that made the news on multiple occasions, where people were putting in $10 and then buying, $10,000 worth of options. And that's where you start to see people get into trouble. But as Gary wrote, and Gary and team, I should say, wrote about how we are now at a record of $1.02 trillion of margin debt. It means if it means that, for an example, if IBM goes from 100 to 0, you lost $100. But if you did it on margin, you didn't just lose $100, you lost $120. So even though you got wiped out, you still owe the company $20 because you borrowed. And as rates go up, the cost of borrowing goes up. And those are those hidden pieces that people don't really pay attention to. Now, Gary, turning it over to you, what do you think that means for the stability of the market? What do you think that means for a continuation of this movement higher? Or could we get people getting near cost price, panic, and have a fire sale, and then you have a buyer strike sending the market lower?
Yeah, so this one's complicated, Mark. The fact is, investor leverage has just hit a record amount. As you mentioned, total FINRA margin debt is 1.02 trillion. That's up 26% year over year. And I view margin kind of like I view alcohol. If you use it wisely, it can make things really nice. Mm-hmm. If you use it poorly, it leads to disaster. And I told this story on the 5 Things once before earlier this year. But I was talking to somebody. We did a segment, an educational segment on margin debt, and I was talking to a friend of mine who he was trading 7 figures worth of Apple stock at a time, and one of the things he said to me was he was really excited because his brokerage had this really amazing new thing called buying power, and he had buying power that was in excess of his account. And I said, okay, you didn't discover anything new. You're just taking on debt. It's just leverage. They're charging you interest and you're taking on more risk. And that's the key thing here. So on the positive side, people can take on more risk and they can have larger positions as long as they can pay the interest on it and cover potential losses. And a lot of people will say, hey, listen, you got a rising market that'll create some growth in margin debt. Okay, fair enough. Margin limits will increase with more buying power from good returns. Okay, fair enough. That's not crazy. Inflation, larger balance sheets, higher equity valuations, they all make margin levels manageable. Some people might say that more people buying on margin is bullish. And I'm assuming, Mark, that these are people who are buying. These are probably not people who are hedging or taking short positions or doing something to lay off some of the risk, which is the difficult thing. In this situation, I would advise caution. Credit spreads are unusually tight. The VIX is low. All of this means the market is pricing in continued calm. That means valuations imply no concern regarding economic growth, inflation, employment, potential tariff issues, AI profitability, and rising consumer credit losses. Okay, so, Mark, I use margin when investing, but I also have enormous hedges in place to ensure against market drops, to ensure against higher inflation, right? I'm not just betting it all on black. And so, if you're using margin to control your risk, that's one thing. If you're using margin because number goes up means number will always go up, you're going to be in trouble. And so I guess if I have to sum it all up in one sentence, I just say it's important to remember that margin amplifies your returns, both positive or negative, and margin calls will always come at the worst possible time, right? So if you're on margin, it's going to amplify your returns when you're down. That's when your brokerage says, hey, we've got a margin call. You need to start selling positions that you've lost money on to raise cash to give us additional security against your loans. And people don't think about that. They think about buying power. They don't think about the fact that a margin call, by definition, will come at the worst possible time. It doesn't come when you're up huge, it comes when you're down.
And one of the key pieces is you don't have a choice because if you don't make your margin, they will force liquidate. And to your point, you're going to force liquidate at probably the low because everybody's going to be forced in at the same time. And that's why you'll see running jokes on Twitter or the like where it's like, oh, somebody got a call from the margin desk because you're going to have to increase your position. One of the interesting things that you talked about is the VIX. And one of the things is hedge funds in particular have been shorting the VIX, in size, some of the largest since the end of 2022. So when you start looking at the VIX, you can also artificially push things down. And I think you listed a lot of the things that are equity focused. But one of the interesting pieces is the bond market isn't showing the same level of security. When you look at the 2 year, the 30 year, and the difference between the two, you're starting to see a lot of cracks. You're starting to see some of this concern. And when you start looking at what Powell is saying, when almost like guaranteeing that we're going to have these rate cuts, when you have inflation that is, as we discussed last time I was on, well above 3%. You have home prices at all-time highs. You have, stock prices at all-time highs. You're almost ushering in a Nixon level or what we would call the third wave of inflation. Because if you go back in time, when you had that last surge that ushered in the age of Volcker, that was the third one where you had these first two humps. Both of them were big, but then the third one really blew off the top. And if you look at some of these pressure points, these are some important things where, and some people believe, oh, well, Powell's going to cut rates, therefore my borrowing will go down or my rates will go down. It's like, that's not how that works. The
No.
market sets rates. And you could see some of these pressure points where guys are going to start getting concerned and they're going to do what they call, which is increase the cash balance that you have or increase the margin that you have to own or pledge in order to have some of the positions, especially as the market starts to get a little wonky, whether it's volatility increasing or things starting to get a bit extended, which again could call people into a position that they don't want to be in.
Yeah, it's incredible. People keep talking about, we need Powell to lower rates, so mortgage rates will be lower. So so their credit card bills will be lower. That's not what happened last time. It is amazing. Again, we just like we were saying, hey, I'm old enough to remember just a few weeks ago when the automakers went crazy, on steel prices or potential steel prices, not actual prices. This was less than a year ago that the Fed cut. And what happened to the 10 year? The Fed cut the Fed funds rate by 100 basis points. That's 1%. And the yield on the 10 year went up by 100 basis points, 1%. The market priced in higher future inflation. So, these are issues that for whatever reason people just seem to not understand.